Hey guys, Sam back with you here Wednesday, January 24th, midday. The next winner of the poll today was for a technical update on Cardano. So I've got here it is on Bittrex. So Cardano is one of the absolute majors in the crypto market. Market cap 16 billion. Look at these numbers here. 71% on the CoinGecko scale. Very, very active amongst the development community at 87% there. This is a huge project. So here we can see the bulk of it. 40% of the trading is to Bitcoin, and it's on Bittrex. So I've got it over here. So here we are. This is the 4-hour of Cardano to Bitcoin on Bittrex, and we can see it's been remarkably technical. Now, is the two so we can look at this here, and this is pretty easy to spot. Now here's where qualifying the counts. It's worth putting the effort in to do that, because if you were kind of lazy about it and you said, oh, okay, well, here's the peak of the oscillator, so that must be my third wave. Well, not so fast. I would propose to you that we have an extension here in the fifth, and here's why I say that. So if I open this up a little bit, we can start to measure some of this. So I'll put it in log scale. That might be easier to spot it. Okay, so first thing we do is, let's check these pivots. So again, as I often do, I'll just wick off the absolute lowest low that I can get, so I don't have to keep going to the left of the chart. So I just know that's my absolute low. So I look here for my one. I get a nice A, B, C. And so here's the A wave, goes right to the 618. And then we ultimately roll over. We go all the way to the 786 to the tick, which, again, wave 2, 50 to the 786. That's where you'd expect it to go. Boom, and then up we go. So we have a couple of things here. So first thing we do is we see, so here's the first algo target. Well, you get a little reaction, but it rips through that second all the way to the negative 100%. So you look and go, okay, well, that's interesting. Remember, back before you knew what was happening, that looked like a monster move, right? So, I know we're talking about with hindsight, but at that time, buyers down here, even if you caught this if this was your 2 and you took the 1-2 here, what a nice little trade that was. And look at the subdivision: 1, 2, 3, 4, 5. All right, so let me open that up, and we'll check that and say, well, does that work? Let's get it before we start launching. So at that time, you're thinking, oh my God, I've got a home run ball. Well, is this the third? So I can see within that, if I can get it lit here. So I get 1, 2, it looks like we get 1, 2. We subdivide again because that looks like 1, 2, 3, 4, 5. But it looks like here 3, 4, 5 into that top. Let me lower that degree so it doesn't look retarded. Okay, there we go. So then this would be 3 here, and I would take that to the next degree. Okay, so there we go. We get that, and then within that third, we get additional subdivision: 1, 2, 3, 4, up for the 5. So we measure it and say, okay, does that make sense as the third? Well, I know I've got my negative 100. That's an extreme for an algo target. So getting that, then I'm going to go check it and say, okay, well, wait a minute. Let's check the length of the 1. Let's look for an Elliott relationship to my 2. And if I pull this over here, so that's interesting. So we get right to the tick. Here's the 1618. That's the highest probability zone for a wave 3, but so that gets the subdivision 3, but we get this nice confluence zone right here. All right, so here's the negative 100, here's the 1618, 175 box. So that would certainly make sense as a 1, 2, 3. Well, then we get this kind of choppy, very shallow 4. So does it make sense? Well, let's expand out since we know what came next. So I would propose to you that that's a valid and a technical area to expect a 3, despite the fact that we get this final rip, right? So an extension in the 5th. It's not unheard of. It's not uncommon. It's certainly in crypto we see it all the time. So this certainly plays as a 3 here. Right, measured that out, so we get this sideways, very shallow 4. So let me pull this off. So as you would with any count where you're anticipating a 4, we're going to measure from the 2 low to the 3 high, see what we get. Well, this is really shallow. So here's the 23.6. Well, that's common spot for a wave 4 between the 23 and the 38. So despite that being shallow, we get a little choppy, a little complexity here. So you see how we have a very simple a simple second wave here, more complexity, maybe you have a triangle here, doesn't really matter, you're just sideways here, so you get Elliott's rule of alternation, simple correction followed by complexity. So far, I mean, it's, you know, textbook. Yeah, you know, this is unusual to have the extension this extreme in the fifth, and, you know, the oscillator can confuse you a little bit, but it's, again, having measured this out as the likely candidate for a third, given where it went and the beautiful subdivision, you can't, you know, it's unlikely. See, if this was going to be the third, then you'd have to be playing this as a 1-2-1-2, and this doesn't play as well for a 2, considering how shallow that is. We know a 2 much more typically between the 50 and the 7-8-6. 50 and the 6-1-8 is the highest probability zone. So to call this a 2 so that you could accommodate your oscillator, to say, oh, well, that's 1-2-1-2, that doesn't play as well. So if we take that off and go, okay, well, wait a minute, there's other things I can check. Well, let's check how that fifth wave, if that is a fifth, is it technical relative to my first wave? So Elliott Trader will take the length of the one wave and project it from the fourth wave. And lo and behold, what do we see here? I get that right on it. That's the 4-6-1-8 to the tick. Right, here's the 4-2-7-2. So again, 3-6-1-8, 3, 2-6-1-8, 2. So I mean, it's as technical as it can be right there. So certainly that's an extreme. But just measuring the relationship between the length of the wave 1 projected from the wave 4. Granted, that's extreme, but it certainly is technical. So we can be confident there that we've got a good, completed, extremely technical 5-wave structure. Okay, so if that's done, if we've got 5 waves there, and certainly hard to argue with it, well, what's next? Well, so now we're just going to look for the 2, right? Just as we looked for this 2 and this 2 and any 2, we're going to pull from the absolute low here, which again, I just wicked it off. So there's my absolute low up to my high here. And what do we get? Well, okay, so here's the first reaction at the 50. So we know the second, most commonly between the 50 and the 7-8-6. So here's the 50 reaction. Something happens here. They run some stops. They pump it down. We don't get to the 6-1-8. We have, you know, no issue of validation here. We just have an impulsive structure into the 1. So here's the 50 reaction. Down we go, up, and then we come back. Now we're back to the 50, and we've had a reaction. So, you know, now it's getting a little ugly in here. Are we done? That's 2 tests of the 50. Do we have the 2 in? You know, hard to be definitive here, because what we're looking for is some completion. Do we get any subdivision, right? So at its simplest, Elliott wave is just about looking for 5s and 3s, right? We trend in 5s, we correct in 3s. But, you know, wish that it were that easy. Here we see we get this. We get what appears to be an ABC here. So we could look at that and go, okay, well that looks corrective for an A wave. And then I get a little ABC here. That looks like it could be a good B, but is that my C? All right. Well, so we see this a lot in crypto where we get these shallow C waves. So let me take that down. But is that my C? So is that the truncated C that we see so commonly in crypto? Well, let's go down to the 1 hour and see if we can make sense of that. Does that play? So if I look at that and go, okay. You know, I love the reaction at the 50, because remember, algorithm doesn't care about an Elliott count. They're just buying the 50s. So if we look here and go, you know, I mean, really what I see here is another ABC. So, you know, if you try, there's not a clear 5-wave structure. You could probably squeeze one in there, but this looks more to me like we've just done that. So we've got another ABC. So if I lower that degree, it doesn't play as well as a C wave for a couple of reasons. One, you'd anticipate more subdivision here. So I'm not saying it couldn't be. But, you know, if I start measuring this, right? So remember, we've always got the resistance coming back the other direction. So if I take my absolute high here and I pull down to this low, what do I get? Well, here's the 50. So essentially, we're stuck between 2 50s. Here's the 50. Here's that algo target way down here. Here's the other 50. So 50 to 50, we're just stuck in a box right now, right here, from 50 to 50. Where are we going? Well, you know, how do you pick one? This certainly doesn't look like, if that's our low, and we've put in a 2, right? Okay, if that's the 2, well, this certainly doesn't look impulsive. It doesn't look like we're coming off of that in the kind of 5-wave structure you'd anticipate. Oh, well, there's the truncated C here. Maybe that's a 1. That's a deep 2. But it does not appear like we're going off to the races here to get an impulsive wave started. It just looks like we're drifting sideways and we're stuck between these two 50s. So it's hard. We want to be bullish. It's hard to. It's hard to say, yeah, that's the kind of reaction that I'm looking for. Maybe you say you could talk yourself into a long 1-2. It doesn't look great to me. So what does that mean? So do you abandon your bullish bias for Cardano? Well, that's not what I'm saying. It's not really playing ball right now. It's not giving us the kind of confidence to be a buyer in here off of the good structure. We're stuck in this box, which happens. Right? Maybe it's just waiting for direction from Bitcoin. Right? We're spread to Bitcoin, so if Bitcoin starts to tear one way or the other, that's certainly going to affect everything spread against it. So maybe we have more complexity here. So again, look here. I can just look at this and tell you. So if I pull here to here, here's the 618. So we're stuck in a fib fight. There's no direction here. What else can we work with? Can I get some market geometry on this? It doesn't really look like it's there. I can get that hot. So do I have anything here to work with? Well, that doesn't do me much. If I go to one of the alternates, that's at least gives me something to work with here. Potentially here we've put in this technically. So here's the 50. Here's the retest of the 50 right on the median line. So it's possible. That's just not the reaction. Now, I mean, you could have this. So you could be doing this, right? And it's just taking a sweet time to do it. That's certainly potential right here. So we've broken. Now here's the lower parallel. We've broken through that. So is this technical? Well, do we have a decent? Let me open it up a little bit so it's a little easier to see. Could this be a 1-2? Yeah, come here. It's a little sloppy, but it could be there. So now, if that's going to play that way, right? So if you're a Cardano bull, and everybody loves this coin, so here, it's buyable. You're right now. So now you're immediately into the overbought zone. But that I wouldn't make a decision based off of that. So you could be a buyer there. You'd have to give it some room. You might wait for it, anticipating some subdivision. I'm on the 1 hour here. Maybe you get a little pullback here that would give you some decent risk reward to say, okay, well, if this is my 2 is in, I'm looking for the next little pullback so that I can catch that looking to get into the third. And that's a contender. Yeah, the best thing about that is you can be relatively tight with the risk. So you could, if you're working on the assumption that this long basing here, and we get, even though we wick through the 6.5, you're basing there, that could play as a 2. So this reaction is encouraging for bulls. So maybe a little pullback here. If you don't get it, well, then you're in the 3, and so you're expecting subdivision within the third. So, you're just, if that's going to play as the third, you're just trying to get in it at a place where you can have reasonable risk reward. So maybe you get the 1-2. Maybe this starts to go, and you can't get into it until you get the fourth of it. So sitting here, now you're just trying to get into this. Can you get into the third? So let me go take that down. Can I get into the third at a place where I've got decent risk reward? Well, at some point in here, we're going to have clarity as to whether or not we get a 1-2 coming out of that, because we need it, right? If that's going to be the third, to confirm, we need an impulsive wave. Can't have a diagonal in the third. So if the 2 is in, and we've got kind of a sloppy 1 here, which looks like we would triple topped up here. If that's our 1 and we get long lazy 2, it better come out of here strong and hard. I mean, for me to trade it, I mean, that's what I would be looking for, right? So I want to see some sort of idea. And if I went down to the 15, can I get a 5 wave here? So I say, okay, I've got a good 1. So I've got a 1-2. Well, in actual fact, you'd have 1-2, 1-2, 1-2. So largest degree, 1, maybe 2, maybe 1, 2. Now looking to get into the next 1, 2. Can you get there? Right. So you're always trying to get the third. So that would be, again, relative to where this could be going, that you could just be getting into the third of the 1. Because if I punch this back out and we look at, well, why is it worth going through all that trouble to try and find the low risk entry in there, because that's your target on the largest degree. So if we measure that, now you start to put it in context and you go, okay, well let's look at the 1. Well, if I'm going for my absolute low here, if this is my 2 here, well, where's my high probability zone for my third? Right up here. So this is your first target here. If we're going to get a third, right, and we're trying to squeeze ourselves in down here, is that some decent risk reward? We're just trying to catch it right there. I mean, some people just say, I don't care about a little, if that's going, I'll take that risk down to that low. What do you get there? That's 8 to 1. Well, we'd be tighter than that. So if you work off of that as a low, there's 17.6 to 1 on the assumption that it's not going to break this 50, the largest degree 50 right here in red. Right, so if I blow that up, we're not gonna break that 50 again. That 50 has been tested multiple times, and we're not going to break it again. So what I get 17.6 to 1. So is it worth trying to fine tune an entry there? Well, that's up to the individual trader. I call that precision trading because I don't want to risk too much because I don't love the way that looks, but it's good enough to say, do I like it enough for 17 to 1? Yeah, I do. So it's a question of now, how much risk are you willing to take? How much do you want to put into that? So we go back down to the hourly, and you say, okay, well, maybe I'd enter here, and I'd risk from, if I get a little pullback here, maybe knowing that I've got that massive upside, maybe I'd risk to the other side of the 786. Right, and I can't even see that target. I mean, here's just the first algo target, and that by itself, there's 13 to 1. So is it worth, trying to fine tune and get into that? Well, I would propose to you that it is. It's worked pretty well for me. Okay, guys, I'll wrap it there.